Welcome back, everyone, to Lunch at the Market. We're all back in the office after a great week at the World Money Show. We want to thank everyone from the show for putting on a great event. Also, kudos for the Gaylord Palms in Orlando for hosting the event. Clearly, they did a better job putting on the convention than they did actually picking the name of their venue. We're going to be breaking down the S&P's top 10 list. They have a proprietary formula that they use to come up with these names. And while I can't tell you what the formula is, we can do a second layer of analysis on the stocks in their list and tell you what we think of them. So their list is alphabetical and in no other order, so we'll do the same thing. First up, American Tower Corp. This stock has come up over and over and over again from everyone from Jim Cramer to the Fast Money Desk. I think even James Altucher mentioned it during one of his presentations. And finally, it's on the S&P's top 10 list. Now, just a reminder that the Standard & Poor's is actually a company, not just an index. So not all the stocks on the top 10 are even in the index. So please don't be confused when the company S&P, who has the top 10, and the index, the S&P 500, which is often used as a benchmark index for all sorts of people, systems, and things. Back to American Tower. We wonder every single time why we don't own the stock until we pull up the fundamentals. Sorry, we just can't bring ourselves to say fundies like everyone else does. Fundies sounds like some sort of kid's underwear, and I'm sorry that just creeps us out, so we refuse to use it. That will probably be the last time we ever use that term again. Okay, I digress, so here we go. American Tower trades with a 60.91 PE. Wow, that's the last stock to do. The last stock that we can remember to do that is Amazon or VMware. That stock now trades with a 91 PE, and that's just too much for us. But at least the PEG ratio, that's a PE divided by growth, is 1.93. It's under 2. Paying more than 2 times growth for us just makes us really nervous. And VMware's forward PE is only a 32, which should bring the PEG down dramatically. So you can see that there's a fundamental story for owning VMware, even though it's really rich right now. The growth in earnings should be there. After getting Polex, Amazon now trades with a 58 PE, much better than the 75 it used to trade with. Its forward PE is 31.6, almost identical to VMW. Its PEG is very similar as well, 1.51. It's actually considerably better than VMware. Now that we've gone through the companies, we'll have to sue to compare American Tower, symbol AMT. Here we go. AMT trades with a 60.91. Geez, the PEG is 3.42. Wow, that is some lofty valuations. You're paying far more than 2 times growth for this stock, and the forward PE is 48. So it's not like the forward earnings are set to really rocket to the upside. The stock only has 67 cents for full-year EPS. That's really not a great number, and it has $4.2 billion in debt and only $233 million in cash. It does have free cash flow of close to $250 million. Honestly, AMT would have to be the play on growing cell phone infrastructure in order to justify the levels it's trading at. We may have to agree to miss this boat, as it looks like it's just too scary for us when we open up the hood. So once again, we'll take a pass and let everyone else do the buying here. I guess you can take a look at Cramer's speculative play from Friday, AMAT Network, symbol AVNW. But its numbers are terrible. No PE, margins are lousy, ROE and ROA are negative, PEG of 11.78. Far worse than any company that we've looked at today. At least it has more cash than debt, and that's a positive. Looks like you just might have to play the mobile internet tsunami from outside its infrastructure, or make a bet that there's some big spending coming in the future that we frankly just don't see yet. Finally, at least for today, is Applied Material, symbol AMAT. The stock doesn't have a current PE, but it does have a 2% dividend. Not bad. The PEG is only 1.46 and the forward PE is 11.93. That, my friends, is an attractive valuation. 11.93 is far lower than any other company we've mentioned today. The company has $2.2 billion in cash and only $200 million in debt. We love to see that. It means that the dividend should be just fine. The company provides nano-manufacturing technologies for semiconductors, flat panel displays, solar, and related industries. So you should be able to play our 3D revolution, mobile internet tsunami, and green technology all in one stock. We're officially adding AMAT to our proprietary 3D index, something Cramer's finally picked up on with his movie theater pick on Friday. We may have to call Mad Money Chain and let them know that we've already coined the name of the index and had it out weeks ago. That's okay, we'll just continue to assert that someone out there is following our Twitter and reading our blog. Speaking of the blog, be checking in there all week as we bring you up to date on everything we saw in Orlando. including a really cool microcap company, We're also going to release our math on the S&P index. Yep, the index this time, sometime this week, so you can see how we get our tops and bottoms of the index for the year. Thanks for tuning in. Check out the blog, which you can find on the MOF News Network on the MagnumOpusFinancial.com homepage. We'll see you tomorrow.